All right, there goes the ding. It's 4:30. Welcome, everybody. It's great to have you here on our monthly PUG meeting. We have a few questions. A couple of them are related to the algo, and one particular new member, Stan, and again Jude had a few good questions. Great questions. I wish I could answer everything there for Jude, but we're going to start with that. And then we have two questions on HGSI, because after all, this is a PUG member group, and it stands for Persons User Group. And so I got bad news for the HGSI questions. The questions that are involved, and we'll go through them. I will be thorough. Regards an indicator that is not mine, and I don't know anything about, and I don't use it. So therefore, I can't really answer it. But we'll get to it anyway, the best we can. So let's get started. George, hello, how are you? Thank you very much. Jerome, thank you. I don't know, Jerome, you just, I don't think I bring any new message than anything that I say. It's like redundancy, right? At least the good thing, either I'm locked into an Alzheimer where I can't remember anything and I just do the same shtick day in and day out, or what my shtick does is it actually, well, it works. So anyway, but thank you so much, Jerome. I appreciate it. All right, let's get started. Trading is risky, involves risk of loss. The purpose for us to go through PUG meeting is to answer people's questions. We give you an opportunity to email them in. If you want to post something in the room, if we get through that, we will. We're on a tight schedule today. We only had a few questions, so we're probably not going to spend a whole lot of time tonight together, as much as you can bang around, but that's all good. All right, let's get started with the first question. And the first question Jude asks is, I have two questions on the summer class models. Now, raise your hand. How many people took the summer school model? Because maybe this doesn't apply to PUG, but I can answer the question. If you took summer school, you got this workspace. And it says, the question is, Q1, question 1. How do you re-optimize these to make it more profitable post-COVID and more reliable and efficient, like the razor focus long and short only? Okay, so first and foremost, let's take a look at the performance and the charts. So we'll take a look at the first model, which was, again, a long short SPY, which was just modified a little bit more and filtered a little bit more for the SPY than the razor focus, which was a class we did, which I did not open razor focus up. And if I do, I risk, well, you know what I risk, a computer crash. So we won't do it. This is the question at hand. One question is going to be covered. It looks like Stan had this question, is how does he see the performance? How do you get unable to get any data from performance strategy reports? So I'm going to cover two questions. Stanley, thank you so much for your questions. And again, that's pretty cool because there are two things. First off, on 9.5, you have the dollar symbol here, and you can see that's your performance strategy performance report. The performance summary. So the question of Jude is, how do you make this more profitable? Trade more positions. This is pretty decent. Yes, we can improve on the shorts. Why are the shorts so bad at only 38%? Possibly because the market hasn't gone down. And that's number one. And number two, the risks are fairly limited. That's number one. How is the overall performance? And I always teach you guys to take a look at the buy and hold return and look at the return on initial capital. And quite frankly, that's a pretty decent, stellar outperformance in the market. Also, what is the percent? Now, this model came with max trade drawdown on a setting that we built with $100,000. So everything that you would want to know about the performance and the summaries come from that one little button right up there, and then a window will open up, and you have your performance summary that you can look at the details of the trades. the overall performance of, and in this case, the profit factor is 1.72. And you can take a look at the periodic returns. You can change this from annual. You can change it to monthly, daily, weekly, and take a look. You could go over here to performance graphs, and you can also, which is what I believe we have done many times before, is to look at the monthly or the average profit by month tab. And what this helps me to uncover is, for this market over the last 5 years, 5 years and a few months, specifically 5 years, 10 months, 5 days, 4 hours, and 30 minutes. I just wanted to make sure I was succinct and accurate. If you take a look over time, the best performing months happen to be November and then December, which is exciting because why? Well, we're getting close to December. And Thanksgiving, which, by the way, we covered in the live trading room. One of the strong seasonal time periods for stocks is next week, the day before and the day after Thanksgiving. In non-COVID, non-presidential election, well, presidential election years can also have a big bang, especially when the incumbent is reelected. In this case, that's still up for debate, I believe. It hasn't been officially documented that there's in my the latest news that I've gotten. I don't know. I could be wrong there too. I believe that things have to be certified, and then it has to be called. Each state has to certify the votes. I don't think that's been quite done 100% yet. So, with that said, remember in 2000 we had an election that I think was contested all the way into like December. So that was another issue. That was, of course, the Bush-Gore election. The Chad problem, right here, down here in Florida, right here, Palm Beach County. How cool is that? I'm here twice now for 2 monumental elections. But anyway, back to the markets. October is generally not a good month for this strategy in the last 5 years, nor is July, which is fairly interesting, the rest of the month. So how you discover on average, now past performances, they say, not indicative of future results, but it gives you a good sense of maybe confidence of when you can trust signals or maybe double check signals, so to speak. So in this particular model, the question is, how do we make it better? Take a look at, short, it got stopped out, went long. Again, this was November. This was the election. It took a profit, went sideways, got back in, and the next opportunity got out at the high. Went long, small loser, went long, got out on a compression stop, went long, got stopped out, went short, took a profit. I really don't know how to make it missed this little down trade here. To be honest with you, I don't know how to make this better, truthfully. Again, this is a reflection of the market conditions. The only way to make something more profitable is to have better market conditions. That's the real answer. So look at the market conditions and what are we doing? Here's the NASDAQ model. Let's double check the NASDAQ model and the overall profitable trend. It too has a difficult October and has a stellar December, so that's always nice. Let's take a look at the periodic returns and the performance summary. We'll go there first. It has a little less profit factor than the SPY. Its profit factor, it's still profitable. Let's take a look at the performance graph. So it has a little bit of a drawdown right now. One thing that I always make mention is, what is the recovery rate on average of after drawdowns? I mean, this is a little bit of a steep equity curve to begin with. And so when we take a look at a market and you say, well, the strategy is not doing great. Well, if you started at this peak equity here, yes, you're probably not happy. If you started at peak equity here or here, you're probably not happy either. What's been the problem with the NASDAQ 100? And again, why is this model not that profitable? If you take a look at in this area in here, which caused some drawdowns in the marketplace, it was mostly in the Qs. In this case, there is no real trend in the market. It gaps higher, it gaps lower, it doesn't move, and it just got chopped up in a I guess you want to call that a mild downtrend. It didn't quite get to the profit target. It had the right trade. It went short. The market just didn't give enough to take a profit. There were narrow trading ranges. So the market condition, you have two ways of changing that. Either go for smaller profits, and you can alter that by simply going to format strategies. Go to format, now on 9.5, and then just reduce your max take profit. In the case that I'll get to in just a minute. So you want to alter, your max take profit will override your risk reward ratio. You can have a risk reward ratio all you want, but if you have a max profit and you change max profit to very small profits, and that's another function of average true range, ATR. What is the ATR in the market in that environment? So once again, monitoring systems and strategies. Here's an interesting concept as well. From October all the way into approximately, I don't know, you could kind of look here. Look at the volume trend. I mean, it really is up until the election, November 3rd or the 2nd. Volume was really non-existent or very light in that market. So again, it's the condition of the market, if anything. But to offer a solution, how do you make something more profitable? It's well, if you have the answer, how do you squeeze blood out of a stone? I'd be interested in that process. It's tough, right? So the only way to do it is to examine the ATR. What is the average true range environment? A, B, reduce your profit. So then all of a sudden, if you do reduce your profit target and the market moves in an explosive move, you would then therefore widen the profit margin, widen or increase your profit back to the original settings. In the VIX, how do we make the volatility more profitable on this model? I don't have a clue. I hate to be sarcastic. I don't mean to be smug, pug, no pun intended. I don't have an idea how to make something more profitable in an environment that it's taken pretty much most of the dynamic trades. To make it more profitable would be possibly maybe change and alter. I mean, this is now hindsight. I don't know what the conditions are going forward. To have made this more profitable, then maybe not scale out at the average profit that in history it's used to, like for example this short trade, and then as you see it scales out of a position and just ride the whole trade out. But then if you do that, you might miss some opportunities in here if you alter the profit target. So for example, if you like this trade and that follow through, and you changed it to say, I don't want to get out of the profit target. Well, then what about this trade here? If you didn't get out at the profit target, you didn't make money because it got out almost at break even on the balance right up in here, right? So it's an age-old question to say what works and what doesn't. This is the Russell, the IWM, and we created the Russell like holy. I'm sorry, I don't want to sound like I said, smug or insensitive. I have no idea how to make something more profitable as this thing has skyrocketed straight to the moon. If you want to make more money, then add more position size or use a leveraged ETF and trade the signals. I might be missing the question, but it clearly was stated, how do you re-optimize these to make it more profitable? The only one that's not as profitable, again, was the Qs. And again, I answered the question, how do you re-optimize it? You change the profit target to help minimize or reduce the profit target in that model, reduce the max profit to account for maybe the ATR or the average true range in the market. All right. Now, this is the one out of the 5 models that I got to admit stinks, and it's the XBI, and that's the Biotech ETF. Now, the reason I created this because I figured one of these days we're going to come out with a vaccine, and we're going to want to see, and as it was in the biotech sector, one of these stocks is going to take off, and I don't know which one, or a combination of them could take off. So instead of banking all your money into one stock, let's use the basket of stocks in that sector and use this ETF. So let's take a look at this performance. It's like the NASDAQ 100. It's had a drawdown. And if you take a look at the market, I mean, it's had some, in this time frame since the election, I mean, where's the market gone, really? I mean, it closed the first hour bar after this long, after it got out at 122.23, and the market's at 124.99. It's gotten a couple choppiness in here. The market hasn't gone anywhere, and that's probably part of the problem that we have. Just like the NASDAQ, let's go back even a little bit further. And oh yeah, look at that choppy trade in here. That's where the losses were coming from, right ahead of the election. And I don't know, there's not, I mean, the histogram doesn't show huge volume changes. Now, to be fair, in case you're not a VIP member and you don't have the access to the volume indicator, we'll simply use on balance volume to be fair and partial. Last I'm checking here, there's no trend in the volume. There's no direction in this market. And yes, this is a drawdown period, and we need markets to either trend or trade in some kind of a semblance. So perhaps the overall biotech, you need to see some type of trade action. And then again, what's the result? Well, you went short and the market did go down, didn't go anywhere, and then stopped out. It went long and market didn't go anywhere and it stopped out. It went short, the market did go down, but not enough to the profit target. So the trading ranges, the trade signals were good, but it didn't capture the profit. So you have two ways to think about this. You either reduce the profit target and maybe the range of the market in ATR, and for TradeStation, let's go over here and go to insert. Insert analysis. Where is insert analysis? There, it should be right here. And the wheel is spinning. That's good. And we want to go over and find indicator. And we want to go to average true range. There it is. And hit OK. Now, this is a 60-minute chart. And we're using, by default, TradeStation in most platforms. Listen carefully. Most platforms, because one copies the other. If eSignal had it, then Trade Navigator needed it, and if Trade Navigator had it, then Thinkorswim better have it, and if Thinkorswim have it, then Schwab will have it, and if Schwab has it, they all copied each other, because if one has it, they all have it. Where do they get it from? Believe me, they all copy each other. Or they picked up a book, which is Weld Wilder book, and he used, by default, a 14 period, which he called a half a cycle. What's 14 period of trading days? It's a month, 28 days on average in a month, they say. All right. Now, I don't, again, Wells Wilder, not to get a lesson on average true range, but since we're on the topic, I'll be thorough. Average true range took the difference of an up bar from the close to the high or from the range of the current bar, whichever was greater. And that's a function of what we teach in mentoring classes and seminars. So for me, I think 14 period, it's too much. So what I generally do is I go over here to format analysis technique, and average true range is right here. We're going to go over to format, and you change on inputs on 9.5. You can either use for less than like a day, a 4 hour, in 1 hour, that there's 6.5. There's, quite frankly, 6.5 trading hours of open outcry, which means there's 7 actual bars, right? The last bar in a trading day is only 30 minutes worth, right? So you can take a look at what I'm explaining. This is 1, 2, 3, 4, 5, 6, 7. There's 7 bars, but this last bar was only 30 minutes, but that's considered a bar, right? So there's 7 bars in TradeStation, or most day trade or end of day programs, right? This is end of day. It doesn't include the pre and post markets. So what I would use, if you used a 7 period, you're averaging out just the 1 day. And I like to use a 10 period, a round number. I think that's, for me, it gives me not the same day, a little bit left over from the prior day. So it had a wide range, it comes into a narrow range, and it averages it all out. So I like 10. I think 14's too much, 7's not enough. It's just my preference, and that's where we go with that. So when we look at the ATR, even on and again, the shorter the time frame, the more sensitive it is to price changes. If we change that back to 14, it's not going to have so many ripples. But on average, if you smooth this out, you got a dollar range in the market. I mean, literally, this whole month, you had even less than, you had 70 cents here, and you had $1.45 on average just by doing this by eye. It looks like we have, in this period right here, $1, $1.15, $1.10, somewhere in there, average range. So if you have $1, that means each bar is about $1 move, okay? When we're in this zone right here, in this time frame. Currently, we are at exactly $1.02 over the last 10 bars. So again, if you're in a dollar range and you're in a short and you're in a trading range, you're going to have to tighten up, reduce your profit target, reduce your risk reward ratio number, and reduce your max profit target. That's hopefully this. Hopefully, I explain that so that you know, number one, what is the value of using ATR? It's not to give you a trend direction of the market. It's to give you identification of the condition of the market. How are the markets moving? Okay. Now, quite frankly, in an environment, on a side note, in an environment where we have the most dynamic need for vaccines, we still have problems with people with diabetes. We still have people with multiple sclerosis. We still have people that can get the common cold and flu, which they haven't cured. We still have cancer. We still have dynamic need for medicine and cures for what ails the human race. And so therefore, if you were ever to say, when would we see an explosive movement in biotech, it would have been, well, in a global pandemic. To be frank, I'm going to do something that I try not to teach or show you, but for just to clarify real quickly, if you had told me in April or in May that the biotech XBI wouldn't move very far, I would have said, hogwash, it's got to go somewhere. But quite frankly, the market isn't really going anywhere. I mean, it hasn't really gone down, but it hasn't really accelerated anywhere. This to me is really, maybe it's just an index that I built this for summer school with the assumption that we could see some dynamic changes, and it may offer some decent trading opportunities. Looks like so far I was not correct, since this course came out, or this workspace came out in July, right? If I refresh my memory, I believe it was in July. If I cherry picked the actual exit of this trade that occurred on or about the 23rd of July, the market hasn't really gone very far one way or another. So how do you make something profitable in a market that hasn't done anything? It's tough to do. And so therefore, I think the only way to change the outlook of that particular model is by reducing the profit target. And then when would you know to change and increase the profit targets? When you start to see an increase, a sustainable increase in the ATRs. And that would be the probably the most succinct and correct answer that I could give on how do you re-optimize to make it more profitable post-COVID. Well, quite frankly, I don't know when we will be post-COVID, but right now, the models are doing pretty well. So I'd have to say, I like the question, I like the engagement, and I I think at this point, just keep in mind, I wouldn't reduce the time frame. You could to 15 minutes on these type of ETFs. But I would also say what you really would want to be focusing on is reducing the max profit target. And then again, instead of trailing a stop, get out at the intended profit target and don't scale out. So that would be that function. I hope that answered your questions thoroughly there. We have. Did anyone else? Did that interest anyone else? I didn't want to harp on one person's questions, but I think if enough people in the room had subscribed or took the class, the summer school class, you know, I'm pretty sure you could see where the markets are going, and again, the performance of these, especially this model here, which, quite frankly, if I don't know how to word it, because when I give a class like we did Razor Focus, many of you are already in the trading room, and you probably would say, it'd be nice, John, if you'd show the Razor Focus in the trading room. I made this commitment that when I do a class and people pay money for that class, it's really not my program per se. It's the class's program, and I don't feel comfortable taking something that someone took a class, the time investment to come to that class, and say, I'm going to use this product in the trading room. And so therefore, it might be nice to have this model per se versus the one that's in the trading room, and because the performance is pretty good relative to what this market's done. I mean, for gosh sakes, it's captured the bulk of the trend. Now, it would be horrible if it bought the dip, stopped out, bought the dip, stopped out, bought the dip, stopped out, bought the dip, stopped out. I'm sure then we would be having a conversation, folks. But this particular model caught and trailed stops. It got long. It got out. It did go short. The market went down, but it didn't go anywhere. It took actual partial profit, got out, went long, took a profit, went short, took a profit. I mean, I don't know, and many people that can actually share this type of performance in real life. They may say it in an email alert or an email marketing piece, but I don't know. This was pretty stellar. I'm just saying that, okay? Brian types in, I don't mind if you show the razor in the room, but that's one person. Thank you, Jay, for that. Not like I'm complaining. I like getting more. Okay, Brian, I see that. Brian had posted a question in case anyone can't see it. I wondered about the max profit, and it doesn't ever seem to kick in for me. If you change, and I don't want to do it on this model, if you change that max profit, that does override everything on the market. Okay. Just to say, now what has to happen though, by the way, it's a 1-2 punch thing. If you have this function on where scale out, if you get out and set that instead of scale out, that is true. 0 is false. 0, if you set that at 0 and then you set your max profit lower, and by the way, before I forget, I'll close this because I shouldn't have done that. If you change that, it will not scale out of anything, and it will get you out of the entire position at the max take profit. Okay? If it doesn't, there's a problem in the code, but that does take care of it, because I actually do use, when I'm looking at certain markets for myself, I set a profit target and I use ATR. If we're in a, like say, for example, a 10 or 12 ATR environment on a 15-minute chart in the ES, and you figure that by the time you get in and out of the trade, the average trade profit per contract is approximately $600. If you set a max profit at 480, for example, on a 15-minute time frame and override everything, it'll pop you out at 475 or the next tick up. Okay, just saying. All right. Let's see. How do I activate radar screen similar to yours? That's a darn good question. I don't know which. The radar screen that we created, it comes together in a uniform product. If it's the VIP package, you should have at the very least the ATR, the volume, and your daily signals and weekly trends. The only thing that would change with the VIP would be the high close dojis that show up on the scans, and then the LCC. That was the only thing that we added as another bonus feature, because I chose to have that because I like those functions. Must I turn the, yes, you must have the computer on when you're using Algo for Trades, and you should never, ever, in a PDF manual, it clearly states, nobody in their right mind, just pointing it out to you, in your right mind, in your left mind, in your center mind, do you ever run an algo and just run and play golf or go out to work and let it run in the background? Ever. Never. Many things go wrong in this world. Number one, and I'm not joking when I say this, perhaps your neighbor's building a pool and the construction company knocks the fiber optics under the ground. This happened in Chicago, by the way, and the neighborhood is out of internet. So therefore, you don't have connectivity. So you need a phone, you need a number for the trade desk, and you need an alternative way, mobile and hardline, to call the trade desk to find out whether orders were sent. Always have your performance check to see if orders were received and accepted on, and that I know is in some of the instructional videos. So whether it was the very first algo and now we're on 17 model, the concepts are all the same. The only thing that changed from the very first model were some of the criteria that we built, modified, and made better. That's it. But nobody should be trading the algo optimizer, auto trading it without monitoring it to make sure that orders were sent, orders are staged and accepted to TradeStation. If the internet went down and you're long in a position and you don't have your stops being able to be sent through and something dramatic happened, it's not going to work well for you. Okay? There it is. Bottom line. All right? So must I turn the computer whenever I am? Yes, so I answered that. If I see the trade is in via algo, can I intercept by closing the trade manually? Yes, we teach that all the time. How you would trade it manually is the first thing that I teach you, and this might be redundant for a lot of you veterans, is simply go to your initially, I always tell people to turn off, because you don't want to get a double fill. So turn off your strategy, format strategy, and turn off auto execute. Turn it off. Do not use it. Turn it off. And then once you've done that, then go and offset the position. Why? Because if you offset the position and something happens in a split second, and then you would get filled, now you're not offset. You offset it manually, but now you have orders that got shot through, and now you're initiating a new trade. And nothing ever comes good out of an error, and that would be an error. So turn off the machine, then override, execute manually. Answer is yes. Okay. If I have further issues about algo, is there a channel where I can ask for help? Of course. Always contact us here at the office. Other than the PUG meeting, we have video instructions, and if there's ever a situation that someone had a problem, we always help our clients. Some of our clients think that we are magicians and can solve problems in 4 seconds flat, and that's a fairy tale land. That's fictitious land. Remember, we're dealing with Ben, who's in Israel, myself, TradeStation. You have different time zones, and everyone has a different issue. If we have to check the code, type up the code, recheck the code, run it with TradeStation, they have to check it. They get back to us. I'm on their dime, not my dime, so I have to wait for them. Then we check what they did. Then we go back and forth. Then we simulate the trades, and we run the program to make sure that bugs were worked out. So I know that some people think that things happen magically overnight, but not specifically. So we do try to work with all our clients on this as thoroughly as humanly possible. All right. So I hope those were most of the bulk of the questions. There was some redundancy between Stanley. Thank you very much. And Jude, and I hope that helped that. And for those that didn't have this model, hopefully you got something out of it, such as how to utilize the ATR to balance out what the market conditions are. And again, we can't expect the market, if it's not moving, to make and that's the problem too. Hindsight is always 2020. It's always great to be a Tuesday quarterback, because Monday Night Football, right? When do you know that this trade, for example, isn't going to be the biggest? I don't know where that. I shouldn't have been able to move that, but that's part of TradeStation's issues. So, for example, in the IWM, you take this long position. Market sideways, or have a stop. If I randomly say I don't like the market, and quite frankly, you can say, well, the volume doesn't look good. I don't like the market. It doesn't look great. All right, what are the conditions? I got a sell signal. The system's still in. Doesn't go down though. Market doesn't stop me out. It's got a trailing stop function. These are the gray lines. Those are the trailing stop functions, by the way. They're not LCCs, because LCCs would be horizontal. That's an LCC. This is the trailing stop. So you have your function in. When you get in a trade, you're at knowing your system and what it's capable of doing, knowing the risks, knowing the rewards. If you randomly decide, or this thing says time to take a profit, and you go, oh, I don't want to take a profit. How do I not know when I get into the trade it's going to be that trade, that big one, right? I don't know. That's the very nature of trading. I really wish I could tell you which trade is going to be the big kahuna, and which trade is going to be a flop and barely make a profit. Which, by the way, in most cases, I would rather take this as a profit than this as a loss. And I'm sure everyone would agree to me to that. The point is that we can't be picky choosy, and we don't have. That's the whole thing about the markets. We don't have the insights to know which trade's going to be the big one. So when we get in a contraction, we have ways that we can handicap the idea of when a market's going to go from a consolidation phase to a trending phase. And so higher time frame analysis, daily, weekly charts, analysis with the volume. If it's in the case of a stock like, or an ETF, sector ETF like XBI, maybe we use the relative strength PMC tool. That's the age-old question about trading. We are in a most historic, dynamic market. I mean, I have no words for it. So I'm in awe that we have been able to provide tools for the last 30, 40 years of my career, and to put it in from a book that was written 20 years ago almost, and then put it into the dynamics of the markets that we currently have in this era of 2020 in the environment that we're in, and see these performances do pretty well. So again, I really would have to say that it's really a hard thing to say, how do I know and be selective of which trade's going to do well? I know this. If I can look at the overall performance and say, hey, it has drawdowns, can I survive the drawdown? If I look at the market and I notice it's in a kind of a really bad trading range, and it's in a an ATR that's fairly, in this case with XBI, I want to talk about not the winning strategies. I want to talk about the one that's in a drawdown. And the reason I would talk about that is because, quite frankly, this is, if you can look at your weakest link of any system of any market and figure out, well, what's going wrong with it, maybe we can learn from that. And that's what I like to do, gang. So when I look at this market and I go, well, it doesn't really go anywhere. It drops and it comes right back, and it drops and it kind of comes right back, and it doesn't really go anywhere. And then when it does drop, it explodes and stops everyone out. The good news is that it caught that trend. The bad news is it cost money to make that trend. And since then, it's just, this is the market we're in. So at one point you could say, hey, listen, until I actually see more of a trend, until I see it from drawdown start to appreciate an equity curve. In other words, let me define what I mean. It's tough to do it now. So somehow it went to 30. I don't know why this happens. Oh, Lord. Why does TradeStation do that to me? Oh, because I changed the time frame before. Great. Well, there's another way of doing it. I'll close the file out, reopen it. Here's what I wanted to illustrate. For several months, 1 month, 2 month, 3 month, 4 month, we really didn't go anywhere from an open close perspective. That shows indecision in the market. It's not like we had a strong trend. It had a flop, and a little choppy. There are times in here, and had a good back test study, we just got really goofy in the last 90 days or so. And that's the irony. You would think that it wouldn't get goofy with all of these wonderful news coming from Moderna, AstraZeneca, Pfizer, Lilly, and there's more, Johnson & Johnson, of COVID-19 relief. The long and the short of it is that maybe perhaps we could say, if there's a drawdown in the market, what's the recovery rate, and how long does it take in history when it's had drawdowns to come back? And so when you get a performance, and I'll do it over here, and let's take a look at the Qs real quick. So bottom line, when you look at the performance and you say, until I start to see the market of its performance, like here's a drawdown, it dips. When you start to see the performance come back, say, okay, I'm going to join the trade now. So when it has drawdowns, when you start to see the recovery, all right, that didn't work out. But when you start to see the recovery, you'd say, when you start to see the recovery, I'm going to join that again. And truthfully, that's still, if you think about it and you look at this chart, I mean, depending on any trading strategy or system, any market condition, if we go from strong trend to consolidation, and that's where maybe what we've been in is kind of a choppy, chewy market condition over the last 90 days. This last month of November, since the election, the XBI model has done pretty well. So I'm trying to help you to navigate when's the best time to trust an algo system. And when it's in a drawdown period, the thing, it's like, great, John, I see it has a good recovery rate, but I financially might not be able to survive the recovery rate. I mean, quite frankly, if you bought the high and you ran out of cash right at the low of the equity before it starts to begin, that's the problem. So what I would advise, and I have advised this many times in past decades, is when a system or strategy goes in a drawdown period, wait till you start to see it get back in line and the trade signals start to do better. And then you can kind of look at the overall market and say, hey, this thing's starting to work. Let me now get more active with this model. All right. So that's what I wanted to make sure that we, at least something to help you of why it's important to look at your trade, your performance, ATR. You have at your disposal, you just need, you have all the information at your disposal. What you need is perhaps insights at better education, guidance as to what tools do you look at and why. And I think that's the bottom line of the markets, is the function of, at one point, gang, we will go through a period where people will, I don't know when, I'm sure it will happen, because it's happened in past times, that we will see a pause in equity performance. Maybe when the Federal Reserve raises rates again, right? I mean, there would be more normalization markets. In other words, not just normalization of the markets. Yes, I do not want to back up right this second in the middle of, yes. Normalization of the market means competing products. I mean, if you wanted to put money to work in fixed income in a CD and think you're going to make money in a, well, this is a joke. Some of you older folks would remember this, a passbook savings account where you got a free toaster by depositing money at a bank. Those days are long over, right? I mean, I don't know. Banks aren't even open in most lobbies because of COVID-19, let alone no one's giving out free toasters. That's for sure. So, and the new kids in the room might be going, "What the hell are you talking about toasters and what?" Yeah, in the old days, the banks would give you little appliances like a toaster oven. If you open a Passport savings account, you could see your money every time you deposited money or withdrew. It was a little book. Obviously, those are an obsolete item because online banking kind of took care of that, right? Anyway, I'm babbling and I apologize taking your time up for that. But it's important to understand that we do go through changes, and at one point the market will change. We will go through a period of contraction in volatility. And right now, when we go through a contraction of interest or volatility in the overall equity market, we're going to have to shift our models somewhere else, maybe back to commodities. I mean, quite frankly, some of if you guys remember, where live cattle and sugar was 60 cents a pound, the beef embargo. I mean, I'm saying the oil embargo in the 70s. I mean, that's been almost 50 years. 50 years since that happened, when, you know, back in 1972, 74, almost 50 years, right? And since we've seen that type of stuff, commodities haven't really come back to those days. And one day they might. And so we're going to have to change and alter the program. And instead of trading maybe stock or equities, we're going to have to be trading other markets. And we don't have to worry about that right now. The best way of looking at the market is you stick with what works until it doesn't work. If something doesn't work, stop using it until you start to see the trend of positive results. And that's the case of what I was trying to hopefully illustrate with the XBI. I don't know how to fix something that to me isn't that broken. Number one, how do you make more money? Well, either increase your lot size, double up, use more leverage, and that's how you'll make more money. That does conclude the questions. I thank you all very much. I'm not sure, Mary, you get Mary. I did not get one on the LCC, the other on the I didn't send them until afternoon. No, that wouldn't have happened, Brian. Sorry. And I apologize. I did tell people in the live trading room, send them to me, and I didn't get any. And that is our conclusion. But if you do, we will have them again next time for you. All right. If you do come in the live room, we'll answer, you know, maybe spend some time on that rather than have me be sarcastic and witty with little innuendos, and then we could be more business-like and answer more sincere questions. So in any event, that does conclude our time tonight. I hope that helped answer some questions on PUG, especially the algo. Oh, no, I can't go. I have to answer this question. So what is the raw? The question was, what is the raw? I don't even, I have to go back because I closed the darn. The question was, what is the, I don't even know. Let's use Dr. Scott's file. And again, I can only speak for my own work. I don't know what, I think Force 10 from Navarone was a movie. Force 10, I think, refers to something that Alexander Elder must have done. I have no idea. I know what a 50-day directional or 50-day moving average or 50 directional moving average volume, I guess, is what that would be. And the question is, what is the raw combo? I wish I could answer that question. I don't know. The combo rank is an HGSI thing. I don't use it, and so therefore I can't give insights on it. I have HGSI indicators on this platform. I think that some of the topics, the earnings per share, I mean, there's certain things that I just don't know are relevant. Maybe it's information overload. The one of the most incredible functions is the ability to add their featured items like their fundamental analysis. I do know that I have my own scans that come in this particular program. I like the fact that the sector and the industry groups are correct. Unlike, as we all know, every platform has their issues. TradeStation has their issues. Genesis has their issues. TradeStation certainly has their issues. Everyone has a little issue. But the best, I try to take the best out of every program. And for these guys, they do a phenomenal job of actually classifying and categorizing the industry and the sector group. I like the fact of knowing information on a snap of a finger. I like this trade. It's, for example, it's my PMC indicator. I can line up my columns any way I want. I can go back and fix them. I'll just share with you real quick. I don't want to turn this into a PR event. I just don't have the ability to answer the question because it's not my indicator. But if I wanted to look at a particular market and say, what is the PMC rating on the sell? If I get a sell signal and it's in a lagging, weakening PMC, to be honest with you, that to me is a definitive market that I am not looking to buy. This is by the way, I just picked agree. I just looked at it, sell lagging. I mean, we could look at anything you want. And again, when a stock with the relative strength of PMC, so whether it's TradeStation, Thinkorswim, or HDSI, anytime a stock has lagging relative strength, it's not something that I'm interested in trying to buy dips, which, by the way, I did a thing today, and the guy, actually, if you were on Money Show, the moderator had asked me, hey, what do you think? I'm in Pfizer. I'm in I think he said a December call. So I went on a tangent. I said, well, let me look at it. We'll do the class. And that's why I went on a tangent with him on looking at Pfizer. I think it was PFE, Pfizer, right? And that's why on Money Show, I went on this tangent. I was like, gee, I don't know if I'd be a buyer of the stock right now. I mean, this is amazing, right? Pfizer comes out with news of a vaccine, and it's still in a negative relative strength pattern, and it can't muster any interest. To me, this looks like a stock that's at the top end of the trading range. So, by the way, could it get back up to 40? Yeah. Is this a stock that I want to buy today? No. I mean, it doesn't look to me, unless we see a buy signal, number one. Number two, it's in a sell mode, by the way. If the relative strength could improve and we could see a positive volume trend like over here with improving relative strength, I'd say, hey, let's jump on that for a trade. So again, there's certain things that I like, that I look at my top-down approach. You guys see me do it every day in the live trading room. How do I use the tools? Again, Persons Users Group is about the tools that I develop no matter what program it's on. And one of the top programs for stock picking and for running scans is right here, the PMC. So whether it's TradeStation or HGSI, those two packages probably have the best quote-unquote radar screens for my work. All right. I'm sorry to take and go a little overtime. Thank you for joining me tonight. And this was recorded. And yes, I am Brian J. Person at personsplanet.com. Jperson at personsplanet.com is that's exactly who and where and how you can find me. Or tomorrow you'll find me at the doctor's office. But today or any other time, you can use that email for everyone. All right? So if it's a question about the markets and anything for PUG, you can send it here to jperson at personsplanet.com. If you do send it to Mary, not within the same day or afternoon, she actually comes to me. She prints them out. She throws them on my desk. She says, answer these questions. They took the time to type this up, answer these questions. So she takes the time to print them out, and there they are. Everyone, have a great evening. Thank you for joining me. I hope you found value in tonight's session. And yes, again, this was recorded. Thanks again, everybody. Happy Thanksgiving. The next time we see each other will be before Christmas, at least for a pug meeting. So happy Thanksgiving. Be safe, everyone. And at the very least, if you don't feel well, don't feel bad, don't go out. Take care of yourself, bottom line. And they do say to drink plenty of fluids, just not whiskey, I think. I'm not sure. Anyway, I'm just joking around. Have a good afternoon, everyone.